Money Talks is sponsored by Astound Broadband, powered by Grande.
Well, this year has flown by, and any financial advisor will tell you, don't wait until your final paycheck of 2023 to make year-end tax preparations. October 1st started the fourth quarter of the year already, and it's now time to prepare. So that is where we focus on tonight's all-new Money Talks. The 2023 contribution limit for 401k and 403b plans is $22,500. And employees that turned 50 this year are eligible to contribute an additional $7,500. With open enrollment beginning for many companies, certified financial planner Neil Vanoy says now is the time to fine-tune.
If you have a retirement plan like a 401k or a 403b through work, now's the time to take a look at what you're contributing. Putting the money away on a pre-tax basis can be a huge tax savings, but you got to plan now because the money has to be put away before the end of the year.
And when it comes to income taxes, well, it's very important to distinguish between the traditional and the Roth IRAs.
Contributions to a Roth IRA won't reduce your taxes now, but they'll give you tax-free income in future years in retirement. Contributions to a traditional IRA will reduce your current taxes, so that can be a good way to determine whether you want to save taxes this year, or if you plan to be in a higher tax bracket in the future, save taxes in future years. The 2023 contribution limit to an IRA is $6,500, or investors 50 or older can put away another $1,000, but your eligibility to take that tax deduction or make the Roth contribution depends on your income, and it will phase out, so make sure you check eligibility requirements before you make those contributions.
And now that we are 3/4 of the way through the year, you should have a good understanding about how much Uncle Sam is taking each payday. And you want to get it as close to breaking even next tax season as is possible.
Now's a good time to change your withholding. If you received a large tax refund, then you could lower your withholding now, keep more of the money in each paycheck. Or if you owed a bunch of money at tax time, you can increase your withholding in your paycheck so you don't get a negative surprise next year and have to send a bunch of money to Uncle Sam.
The market has been very up and down this year, and if you have some stocks that have faced losses, selling and moving to a better asset could end up being a good tax choice.
Now's a good time to review your portfolio for what's called tax loss harvesting. If you have a taxable investment account and you have investments that have gone down, you can sell those, use that loss to offset future gains. Just be sure not to buy an identical investment in any account you have, or the IRS won't let you write off that loss. That's known as the wash sale rule.
The old wash sale rule. Neil also added that bonds have suffered losses over the past couple of years, so now's a great time to review your bond holdings, and you might be able to use tax loss harvesting to swap one holding for another there as well.